Welcome to the Del Walmsley Radio Show. Listen and grow as Del questions the status quo, encourages you to think differently, and empowers you to make a better life. Get ready as Del challenges core beliefs, seeks the truth, and reveals the roadmap to the lifestyle you really want. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today, my friend, is Tell Del Tuesday, where we bring on guests, members of Lifestyles that have accomplished quite amazing feats sometimes, and today is no small story. It's a huge, giant feat this gentleman has accomplished, and we're going to share it with you today. With me here today is Vaibhav S, and he's out of Phoenix. And Vaibhav, I have to tell you, your aggressiveness in life, the desire that you have to get ahead, is times mine by 4, probably. Somewhere along that way. Just amazing how much you've accomplished. And, you know, most people join Lifestyles because they want to retire. You join Lifestyles to build giant businesses, which is amazing in itself. So welcome to the show, and let's get started with this. What was it that, talk a little bit about where you came from, what you were doing before Lifestyles, and what prompted you to decide to get into real estate investing?
Hi, Del. Thank you for inviting me to the show. In 2006, I came from India to U.S. To work in IT industry. I worked in IT for 13 years here in the United States. And then I was doing stock trading while I was working in IT. Went through the great financial recession, and then lost multiple times my stock account. And I felt the need to channelize that energy, that adrenaline, somewhere else, so that I don't keep going back to whatever I make. I go and dump it in the stocks, you know. So it was kind of a bad habit at that time. I wanted to channelize that, and so I started, buying single-family real estate. And back then I was in Bay Area. I was in California, so I've always been in California, and so then I was doing rental properties there in Sacramento, and then that's where I bought my first property in 2015. And before that, from 2012 to 2018, I had my IT company, staffing company. I created a staffing company, so I was doing IT staffing, and then in middle of that, in 2015, I started buying rental properties. I liked the cash flow, and the tax-deferred income as we get because of depreciation. And so I was just thinking, how can I grow that bigger, that tax-deferred income? So before even joining Lifestyle, my goal was how to get the tax-free income, and we don't have to pay the taxes, and I can invest on a tax-deferred basis. So I also went with the insurance plan strategy. So I got a couple of insurance, and then I was working with that insurance just to create the tax-free income in future. But then in 2016, I found Lifestyles, and then started investing passively, and just it was a great vehicle, great way. A great map for me to where I wanted to go.
So you started out as a passive investor living in California. Were you investing with people outside of California? Because what we're going to share with everyone here today is that Vaibhav has accomplished many different firsts at Lifestyles by investing in places that no one else was willing to or understood enough about the area to invest in. So he's got a bunch of firsts we're going to talk about. But you started what you're saying now, I didn't realize this, as a passive investor yourself?
Yes, I did.
So what made you think that you wanted to change over and become the lead yourself, be the syndicator, be the lead investor?
I started in 2016, and as soon as I started, I invested in 3 passive deals. And the way I was, the leads who I was working were, they were doing great job. They were great leads, and I learned a lot from lifestyles from my mentors. And then I thought I can do this too. So one of the things that I wanted to is I was kind of done with IT. And I tried multiple businesses. I even started an Amazon online store once, and then that didn't work. But I tried multiple businesses because I just wanted to get out of IT, and that's why I was investing passively. And I think I had a little bit of money, and I thought maybe I will try and do a syndication in Sacramento, in California. And just because I was having the single-family rentals in Sacramento, and that market was growing and it was doing great, I thought I would be able to at least try here in Sacramento. So that's what I think everything came together, and I thought I'll try.
So interestingly enough, I don't think that what you accomplished in Sacramento could have been accomplished in too many other California cities. Sacramento is probably the closest to Normalville in California. But you did go in there and buy your first apartment complex in Sacramento, which I thought was interesting when you did it. And it turned out pretty well, huh?
Yeah, I think it turned out pretty well. We just applied the you can say as proper lifestyle model as possible. Found a very deferred maintenance, very rundown complex, 28 units, and as soon as there were rent controls, I heard the words of rent control coming in. We already achieved our 5-year pro forma in 1 year. So we thought, we will be able to take our chips and move out of California, because I didn't want it to be part of any rent control. So we sold that deal in 1 year. Investors made 125%. So that was great.
So that's excellent. That's a great first decision to make. And you get in, you get out, you make your money, and you moved on. Then you decided to go to Phoenix, Arizona, which is interesting. I think a lot of people live in California, and I'm just perceiving this myself, believe that Phoenix is like really pretty close, huh?
Yeah, it was. So my criteria to go out of California while I live in California with family was just to go out where I can reach in less than 2 hours of flight time, which is growing. So I'm a big data guy, and so I was taking a look at where the job growth is, where the net migration is, where I can get the crime, and above all, everything has to be, first of all, landlord-friendly states. So all of this, there were many states I was able to narrow it down. But then I also wanted, coming from Sacramento, I also wanted a little bigger market where the apartment stock is higher. Sacramento was a small town, so it was getting harder if I would have to do a bigger deals. And so I just also wanted a little bigger market than Sacramento. So I think Phoenix State, everything came out on top of everything. And I think my investors and I am glad that we chose Arizona in 2018. I think it was a good decision with the investments at that time.
Okay. So now you've gotten to this situation where you've got this stuff spread out. You sold the one in California, you got one in Phoenix, you got 2 in Tucson. Where did your mindset go? Because this is obviously not the normal person. Normal person buys one apartment complex, sells it, buys a second one, maybe buys a third one, keeps 2 of them, and it's taken multiple years to do this. You were jumping on this. You came in at 2016, 2017. You bought your first one as a lead investor. 2018, you bought the 64 unit, then you bought 2 more of them in Tucson. So you've now got 3 properties, and it seems like that was only just a taste for you. What was going through your mind at this time? Vaibhav, explain that to us.
So the reason was we were getting great cash flows. So the 64 unit at that time was paying 20% cash flow. So that was stabilized. The properties in Tucson were paying great cash flows. So all these properties were stabilized. And the reason I kept going is also the investors, I believe in 2022 even, till my last deals, it was all investors asking how we can invest more in Phoenix and Tucson. So it kept me going just because the previous properties were stabilized. It was cash flowing well. If we would have sold at that time even, we would have made money, good money. So since those properties were stabilized, I started finding another cash flow stream for us. So which brought me to Phoenix again. And in Phoenix, this property had a great story, 304 units. I never owned one single property with 300 units till then. And so it was a great story. I think it was listed. I did not buy that at that time because it was not underwriting. And broker kept reaching out, and I said, no, it doesn't work. It came back to me after 4 months of listing at that time, and they were not able to sell it. And we were able to get that for, around $8 million lower than what it was whispered at that time. So it was a great buy-in. Even after the contract, we found several issues. So we had to go and retrade that deal for another $1.1 million. And so we were at a great basis there. We were getting great cash flows. And that property was even paying 22% cash flow.
Wow.
So I think it was a great purchase, and so I just didn't want to miss that income stream and the chance for all our investors and to create that.
You now are in this deep. You got 1, 2. That was 2 there. No, 3, and that was 4 properties you've done. When did you decide to let go of the IT work, or was that from the very beginning?
No, the IT work was done in 2018. I retired myself just before purchasing of the Tucson portfolio in 2018.
Okay. So it's done. You decided this is going to be your career. Did you let go of the other strange businesses that you tried?
Everything. This is the only thing.
All right. Very good. Well, I'm glad that you stopped with the stock market, because we've all realized that stock market we have no control of whatsoever. So that's always a good thing to get off your back. But the other businesses are always interesting, because I went through trying a lot of different businesses myself, and they weren't the same thing as real estate, So it's good that you got that cleared up and you're ready to talk about the rest of it, because we've still got a large story to cover. So we're going to take a break before we come back with Vaibhav S and the Del Walmsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Del Walmsley Radio Show returns in moments.
Want to retire in 5 years or less? You can do it, just like Lifestyles Unlimited member Lisa.
So we started passively. It was on vacation is when we realized we really need to take the plunge and be more active in this. Just because I'm an educator, I wanted to really know what I was doing. So it was just education on my part is really big, and knowledge. And I'm like, well, I could do that.
Go to GiveMeTotalFreedom.com. GiveMeTotalFreedom.com. Enter code 2024. Join and learn for just $297 with Lifestyles Unlimited.
You're hearing the Del Walmsley Radio Show. Want more life-changing knowledge? Access our podcast and listen on demand at LifestylesUnlimited.com under the radio tab. Now your host, Del Walmsley.
Welcome back to Del Walmsley Radio Show. With me here today on Tell Del Tuesday is Vaibhav S out of Phoenix. And Vaibhav has currently, what it says here on his resume, 6,248 units that is under either ownership that he has or ownership that he's a part of. And he's managing 1,628 units, and he said it was about 12 apartment complexes. We're going to move on here in a second with a tough question, but before we get to that, Adding all that up, 6,000 units plus. I mean, there's a guy on the internet that claims he's got 7,000 units. His name is Grant Cardone, and he says he's a billionaire. Now, I don't believe he's a billionaire, but he might own $1 billion worth of real estate because Curtis Haynes owns $1 billion worth of real estate. My question to you is, does this 6,200 constitute $1 billion? Is it close, or where's it at?
Yeah, it would be nearby. It won't be $1 billion, but if the total market valuation and everything, it would be close to there.
Well, I like your honesty. It's so easy just to slip the B word in, right?
Yeah.
I've never had $1 billion worth of real estate, and I tend to never own $1 billion worth of real estate because I'm just not that aggressive. But, the point is not how many units you have, it's are they profitable or not. So the next step I want to bring into your conversation here is the next deal you bought was in Tucson, again, another 200 units, portfolios, which you have to break that down for us, what that consisted of. But isn't 2020 when COVID started? Am I remembering that right?
Correct. That was the time when COVID was starting, and I think already started. I remember it was our expo in March in Houston at that time, and I was working on these properties from last 6-7 months. I would say around 6 months or so, because these both were, just one I was working for last 6 months because one was an off-market property in this 200 unit, and so I was able to I was not able to get under contract. So that was 144 unit, but in the meantime, if you see, I was getting into a bigger properties, but then I found a 56 unit property, which we were going to buy just for as my IRO deal, our family's deal, and I was going to change direction at that time, and I was just going to do IRO deals from then on. So that's why I was looking at that 56 units. So I was able to get that under contract, 56 units. And then, again, this off-market property that I was working from so long, 144 units, that came to fruition. And so, again, at that time, I was not able to do IRO, and I created a syndication out of that. So that was a 56 unit and 144 units. So that became 200 units, and 56 units, we were able to sell that before the market turned, and I think it was a great exit. That was the plan anyways, because it was a totally, I would say, totally dump of a property, but it had good bones and good prospects. So we sold that in 1 year, and everyone made a great profit out of that, and we kept the 144 units still for the cash flow.
Obviously, the 144 is easier to manage than the 64. A little more economic to scale on that situation. That's good. So, did you have any problem with COVID? You're at 1, 2, 3, 4. Let's see, you're 5, 6. You're now at 6 properties, I guess. What about COVID? Was there any challenges with COVID, and how did you overcome them?
COVID was a challenge, just a shock at that time, where we did not understand how it is going to impact the financial market or how it's going to impact our residents' business and their ability to pay the rent. And so we were all doing the modeling on how we will be able to, if something happens, how to raise the liquidity. So we did all the modeling. Everything was done. Everything was, worst case scenarios were put in. And so we were ready if anything were to happen. And that's the, unvaluable support within the lifestyle community that we get, that everyone is together, everyone is working on the same goal. And so we went through that. Whatever we expected, the worst case scenarios we created, it never came to fruition. And I think it worked out well because we were planned. We planned for everything. And so at that time it worked great. But we were already looking to make a change from Bay Area, from California, and I always wanted to be near my properties. But it was just a family. It took their time. They took their time, but because of this, and then we started thinking about moving to Phoenix again. Let's think about moving to Phoenix again, and then it happened in 2021. Not sure just because of COVID, but I'm sure that was a part of it. And then we moved to Phoenix in 2021.
So where in California did you live, by the way, just so people can resonate to that?
I was near San Francisco in a suburb called Fremont.
Okay. So I'm going to ask you a question. I don't have an agenda on what you answered, how you answered. I'm just curious. Have you been back to San Francisco area?
I visited. We visited a couple of times.
Do you, being someone who used to live there, now going back, think that it has changed at all recently?
It is. It was changing when we were there, but it has changed completely now. Not for good.
Yeah, that's what I was wondering. So
Yes.
Did that have any influence on you leaving, getting out of there at the time when
Yes.
it's starting to change?
Yeah, it was a total influence, and that was the reason I was convincing my family to move out, just because the industry what I am in, and I was seeing the differences, and then again, I don't want to go into too much politics, but it was like becoming socialist, getting more homelessness on the streets everywhere. It was kind of something that I didn't want to raise my kids into, and even the part that we were in the Silicon Valley was great, but the exterior of that was changing very quickly.
So, Vaibhav, I've got 3 more questions for you, okay? And I want to get them all in, so we're going to have to move pretty quickly. So the next one is 2022. Market peaks. It's done. It's over. It's too high. The prices are so high, the deals are not making sense. Interest rates have dropped to almost nothing, and you can get adjustable rate mortgages with almost nothing. You can get IO for the entire length of the time of the loan. They were just giving money away, and because they're giving money away, 8,000, 10,000, nobody syndicators out of nowhere that had never done it got into the market and were paying way too much for every deal that happened. Yet you bought a couple more units, actually 3 more apartment complexes. Tell us how that looked and whether or not it worked or not. 2022, peak in the market.
Right. So the first in that portfolio was closed in February. That was our 1031 from the previous deal that we sold for 275% return. So everyone wanted to roll that money off. So we rolled it from a C-class property to a nice B-class property, and we were able to get it for a great price at that time. It underwrote for a great price. So we bought that, and then the other 2 were closed later part of the year. The last one that closed in that portfolio, that's when the market changed. We closed it in June of 2022, and market changed around March started to change from March of that year. And so we were, I did the contract correctly, and so we had a little bit of issue on the closing, and the escrow was open. It went with us. It helped us, and I was able to renegotiate $5 million from that last deal, from the purchase price that was signed. So it was a great. We were able to negotiate very well, and all those properties just finished all the underwriting till going through the numbers till March, and we increased. Even though we bought it at the top of market, we only buy C and B product, and we only do the value add mostly. That's what I do, and we increased the NOI by 75%, 65 to 75% in all those 3 communities in 2 years. So I think it was a good properties, where we know that going in we will be able to make certain changes and we'll be able to get the NOI high. So yes, it was bought at the top of the market, but we knew what we were going in. The market changed on us. We are dealing with it right now, but the NOIs were increased greatly so that if we have to refinance, it will be easier for us to still refinance at this rate.
Do you have any adjustable rate mortgages that you're fighting?
I have adjustable rate mortgages on most of the properties, but we are not fighting any of that. Of course, our cash flow is undercut because of the escrows, the rate cap escrows that the lenders are taking. But we are just we have to in this time. We are just setting those multiple digit cash flows to a lower number. So from 20% or 22%, we are paying 11%, or in some deals, we are going from that 15% to 5 to 6%.
Gotcha. And that's just the Fed decided to get rid of the inflation. So that was something that the Fed did to everybody out there, but some people were in a good enough position it didn't kill them, and a lot of people are getting destroyed by it. So it's good that you're solid and still producing. And, you know, when the interest rates, and if the interest rates ever go back down at all, then the cap rates will flip around back a little bit. I don't think they're going all the way down, but that's just my opinion. I can't see the future. So let's answer the last two questions I have, because I think people want to hear this. The next question is, you talked about even in California, they let you use the depreciation against your income. With this many units, you must have massive amount of depreciation. How does that affect your income? Are you paying taxes on all this? I mean, this has got to be a lot of money coming to you from all these different deals.
Yes. So on the passive deals, again, those are just, I'm trying to invest more money in a passive manner. But I don't know how much I'm getting back from that. But depreciation-wise, yes, I have not paid, the taxes are deferred from last 6 years. So not paying much taxes or any taxes from last 6 years. So that has gone well. Yeah,
well, I like the fact that you're trying to be very conservative in term the taxes are deferred. That's actually true. They are deferred. Unless you do like you did when you sold the property in 1031 forward, so you didn't have to pay the taxes. But the bottom line is you're making quite a bit of income, I would assume, just because I know how much you get paid on each kind of property. And if you're not paying any income taxes on it right now, that makes a big difference. Last question. Let's talk net worth. When you came in to net worth, what you have right now. Everybody wants to know, with this much work and this much activity and success, what happened to your net worth from the time you came in to now? Give us some indication.
I would say 30x.
30x. Woo.
Mm-hmm.
That's beautiful. I think we're going to end with that one, buddy. I don't think you can outdo it. Thanks for coming on the show, sharing your story. Thanks for doing a great job for our members. And the rest of you out there, remember this. It's not all that money, although that's a lot. It's just the lifestyle. Have a great day. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley Radio Show are those of the host, Del Walmsley, his guests, and his callers. The Del Walmsley Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.